We're joined now in the studio by France 24's business editor, Kate Moody. Kate, tell us, investors have been watching all the developments very closely. How are stock markets reacting to the lack of a clear winner?
Well, surprisingly well, despite this ongoing uncertainty, Julia. Markets analysts saying it's really a sign of just how unusual the times are that we're living in here. If we wind up with a contested result, however, that drags on for a few weeks, that would be likely to change. Now, U.S. stocks did come under some pressure in futures trading overnight, but they have jumped after the opening bell. The Dow Jones up over 700 points there. The S&P 500, 3.25%. The NASDAQ up over 4% at its highest level since April. The tech rally being driven by Uber and Lyft, and we'll be talking about those ride-sharing platforms in a little bit. The major European indices, meanwhile, started their session in the red as well, but they climbed to close higher there, up 1.6% in London, 2.5% for the CAC 40 here in Paris, nearly 2% for the DAX in Frankfurt. Well, Craig Erlam, the senior markets analyst at Oanda, says that investors are still holding out hope for a conclusive victory one way or the other. Take a listen.
I think it's not the worst outcome as far as these markets are concerned, but the worst outcome is still plausible, and that is that this carries on for weeks and goes to the Supreme Court and is fiercely contested. I think a victor is the preferred victor, an uncontested victor, if you will. Trump, we've seen for the last 4 years, is very favourable as far as the markets are concerned. Stock markets love low taxes. Stock markets love growth ambitions that Trump favours. The stock markets like lower regulation. And so I don't think it's necessarily Biden that the markets prefer. It's a clear-cut victory that will not be contested and will not be dragged out. We have enough uncertainty in the world right now. We're going into a major second wave of coronavirus. We need leadership. We need clarity. And that's something that a contested presidential election doesn't offer.
Now, whoever takes control of the White House and both houses of Congress will have to tackle the pressing issue of a stimulus package for the economy.
Yeah, talks about another round of aid have been ongoing since the summer, but lawmakers really failed to reach an agreement before the election. Among the most pressing issues that will come are the extension of more unemployment benefits, both to support people who are out of work for longer than they would usually be eligible, and the more generous benefits that extended to support gig economy and independent workers, and topped up weekly benefits with an additional $600 per week at the start of the pandemic. More support for small businesses in the form of grants and loans is needed as well. There's another round of stimulus checks being proposed as well after those direct payments of $1,200 earlier in the year. And there's the question of more support for the airline industry, which put 30,000 people on furlough after initial support ran out at the end of September. In general, the Democratic proposals would see more money being spent for American households and businesses, although, of course, the makeup of the new Congress could mean changes to come. The issue of stimulus, though, certainly weighing heavily on the stock markets as well.
Now, of course, you mentioned that unemployment and rebuilding America's labor market after the pandemic is going to be a crucial challenge, and it's likely to take a very long time.
Yeah, whichever administration gets into office is going to have to tackle this. Nearly 50 million Americans lost their jobs as the pandemic shut down businesses across the country in the spring. Now, more than half of them have been rehired in an initial boost for the labor market, but at the beginning of October, nearly 23 million people were still claiming unemployment benefits. For comparison, back in October 2019, that number was around 1.3 million, so huge differences there. A new report released just today suggests that the private sector added only 365,000 jobs last month. It's around half of what economists had expected. It's the lowest rate since July. The overall unemployment rate is 7.9%. That's the figures for September. We'll be getting the October figures this Friday. Economists, though, warning that rehiring could really slow down as the number of coronavirus infections picks up. And they say that millions of people could remain out of work for the medium to long term. It will absolutely be one of the dominant themes for whichever administration emerges.
Now, another issue on the ballot in the state of California was about the so-called gig economy, and voters handed a victory to platforms like Uber and Lyft.
Yeah, it's something of a surprise, perhaps, but it was a really closely watched race in California. Voters approving Proposition 22, which essentially overrides a law that was passed last year, saying that ride-sharing or delivery apps do not have to treat their workers as employees. Now, it means that drivers and delivery workers of companies like Uber, Lyft, and Deliveroo will continue to be treated as as self-employed or independent contractors, and therefore they won't be eligible for a guaranteed minimum salary or employer contributions to health insurance. Uber and Lyft in particular had lobbied heavily in the run-up to this referendum, which was one of the most expensive ballot measures in California's history, and their shares have jumped 15 and 13% respectively this Wednesday. These are questions that are being asked in cities around the world, and the California referendum could set precedent not only for the 500,000 gig economy workers in California, but millions more across the country as well.
Okay, Kate Moody, thank you very much for that. Kate Moody with the business update there, one day after election night. Well, let's circle back to the